Monday, January 22nd, 2018, Monaco 64, home of alternative economics and contrarian views. So I've gotten back from Switzerland with my wife. We flew in this afternoon into City Airport. This morning, we left the mountains in Switzerland, where we were. We took a train down to Montreux. And actually, we had to change trains to Geneva Airport. And the train was canceled, which is really unusual for the Swiss railroads because they're so efficient and always on time. But what happened was that a tree fell on the track prior to Montreux, so they canceled the train. But they paid, the Swiss National Railroad Company paid for us to get a cab with a few other people. And the cab took us to the next city, Vevey. And from Vevey, we took a train to the airport in Geneva. And we were a little later than we were programmed to arrive there, but no problem getting the plane. So yeah, that's one thing about Switzerland. It's very efficient, very orderly, and I want to talk a little bit about the Swiss franc and the history before I go and look at the markets. The history of the Swiss franc. I mean, the Swiss franc has always been known as a safe haven currency. Not only because I think Switzerland has been neutral since the end of the Napoleonic Wars, so it's very stable politically. One interesting thing about Switzerland, because I lived there up until 1992 for about 5 years, we went there to see family. My sister lives there, a brother-in-law, my mom, my sisters. And one interesting thing that I remember back when I lived in Switzerland is that no one hardly knew who the president of the Swiss Confederacy, as they call it, was. And why is that? Because Switzerland is divided into, I think, 26 cantons, or the equivalent of states in the US, or counties in England. And power is very decentralized. The federal government is important, of course, but the president of Switzerland only serves 1 year. So I asked my brother-in-law when I was there, do you know who the president is? He said yes, but he said, yeah, very few people know it. And that's a good thing, It just goes to show why the power in Switzerland pretty much rests with the people, in my opinion. But the money, that's been changing a lot. I went through the Swiss franc on Wikipedia, and basically up until the 1850s, some of the cantons in Switzerland had their own coins, silver coins, gold coins. They issued different coins. And apparently it says here, which is very interesting, that, and I'll read, although 22 cantons and half cantons issued coins between 1803 and then 1850, less than 15% of the money in circulation in Switzerland in 1850 was locally produced, with the rest being foreign, mainly brought back by mercenaries. Well, yeah, the Swiss have the reputation of being good fighters and mercenaries. I'm not gonna criticize them for that. I'm just telling you that basically it was Swiss franc or the coins from the cantons was only 15% of the money supply. So back then it didn't matter if it came from another location in the world, because it was silver and gold. So one interesting thing, and the reason why the Swiss franc has remained such a has the reputation of being a safe haven, is this, and I'll read here. Even after the monetary union faded in the 1920s, and that was like a Latin monetary unit in 1865, it says, officially ended in 1927, the Swiss franc remained on the silver standard, which was basically 4.5 grams of silver, or 0.290322 grams of gold. That was the Swiss franc. And it remained on that standard until 1936, when it suffered its sole devaluation on September 27th during the Great Depression. And it goes on to say the currency was devalued by 30%, following devaluations of the British pound, US dollar, and French franc. So they had to fall. I mean, the US, Roosevelt devalued it by 75%, if you remember. So it says here, in 1945, Switzerland joined the Bretton Woods system and pegged the franc to the dollar at a rate of $1 was 4.30521 francs. And they devalued slightly. It was changed in 1949 to 4.375 francs. And the standard was 0.203125 grams of gold per Swiss franc. But the reason why the Swiss franc was a safe haven up until recently is this, and I'll read. The Swiss franc has historically been considered a safe haven currency with virtually zero inflation and the legal requirement that a minimum of 40% be backed by gold reserves. Well, the Federal Reserve had that 40% backing, which they abandoned, of course. And it says here, though, however, this link to gold, which dates back from the 1920s, was terminated on May 1st, 2000, following a referendum. By March 25th, 2005, following a gold selling program, the Swiss National Bank held 1,290 tons of gold in reserves, which equated to 20% of its assets. And I think that's gone down in terms of percentage. And then they had a referendum in 2014, which was the Swiss Gold Initiative, and they proposed to restore a 20% gold backing, but that unfortunately was voted down. And one thing I'd have to say, when I lived in Switzerland until 1992, and then go back regularly, before 2000, I remember the real estate prices were very, very stable. For example, prices from the 70s to the 90s didn't change much. And you might think, oh, that's not good. It's not a good investment. But the Swiss franc kind of, the dollar dropped from over 3 francs in the 1970s to, a one handle by that time. So yes, the property prices in Switzerland and inflation wasn't there. But the Swiss franc was very strong, and that's why it was a safe haven, because it was 40% backed by gold. And I think that's one of the reasons why Switzerland has been such a stable country. They've had sound money. Of course, that is changing. And I think what happened in 2000, there was a big push from the powers that be outside Switzerland. They started picking on Switzerland for their bank secrecy laws. They started They started kind of legal cases against Switzerland about money that they had during World War II, which is a bit hypocritical because the Bank for International Settlements, during the war, of which the British, the Americans, the French, and the Germans, all the warring factions, they ran that bank and they did business together. So I think they picked on the Swiss basically so that they would abandon gold, because it was competition for the rest of all the fiat currencies as well. And maybe for the Swiss as well, they had no choice, because if the Swiss franc had remained too strong, it would hurt their economy. The Swiss economy depends a lot on tourism. I know they have other engineering, pharmaceutical, the watches, and that would have made it difficult as well to export. So maybe they had no choice, but Switzerland's still a very stable and wealthy country. But the difference that I've seen now in the last 18 years since they've abandoned gold is that there is, the real estate boom has been huge, and mortgages are very low, and people are taking advantage of that, and that's why you have, you know, prices have gone through the roof in Switzerland, especially in the resorts where the very rich go to. They also used to have a limit on how much square footage foreigners could buy there, but that was lifted pretty much about the same time when they went off the gold standard. They had their own gold standard. So that's Switzerland. So we spent 5 days there, and we're back here now in England. And I see that the markets are, I mean, this morning I was following the markets a little bit in Switzerland. I saw the Dow was down quite a bit. You know, the stock market was down, I think, about 80 or 100 points. I'm not sure. And now we're only down 12. S&P is up. We do have this government shutdown in the States. Distraction, in my opinion. We need to keep a focus on the money, interest rates, the central banking, fiat money system, all the debt. That's what we need to keep an eye on. I see that gold came off earlier today, below 1330, but now we're fairly strong. We're at 1334. We got up to 1336. Silver still stuck here around 1702. Currency-wise, the dollar is weak again, especially against the pound. The pound has been very strong. We're back above, almost at 140. It's up 105 pips, or 0.75%. The euro is up at 122.45, up 0.25%, and the dollar is basically unchanged against the yen. That's what's keeping maybe gold from going further up. And I know a lot of people who are not dollar holders or not domiciled in the States are frustrated because their home currencies are not really going down against gold. I wouldn't worry about that. I think eventually they will. I remember back around 2003 to 2005 when gold was really doing well in dollars. Didn't do much in pounds, and then all of a sudden gold took off. So don't forget, all these fiat currencies are derived from the US dollar and the Bretton Woods system. So if the dollar keeps getting, worth less and less, they will also become worth less and less. It's just that these central bankers coordinate a lot of things. They take turns, but in the end of the day, even the Swiss franc, it's just fiat money. The Swiss have gone from being very much for sound money to becoming totally reckless, the Swiss National Bank. And I say that with proof because, they're printing money to buy NASDAQ stocks. They're huge holders of, the FANG stocks. Gone are the days that, they keep a 40% backing of their monetary system. I've kept some Swiss franc banknotes. So I guess, that's a 20 franc note. So that's got some backing of FANG stocks. What will happen if there is a huge correction? That will become worth less. Anyway, so that's Switzerland. I still think it's a very interesting country. And the most interesting thing as well, aside from having had sound money and being very stable and orderly and prosperous, is that they have four different languages. The Swiss German, which is like 2/3 of the population, and then you've got the French part of Switzerland, which is probably about 20 to 25%. Then you've got the Italian part in the south, and you have a language that is almost dead. It's called Romanche in the eastern part of Switzerland, near Davos, where Trump is supposed to go to. And in spite of that, there's there are rivalries, probably a little bit, and the Swiss Germans joke about the French Swiss, or Suisse romand, as they say, but the country is very unified. You don't hear about, cantons really wanting to split from Switzerland. So in spite of having different cultures or different languages, it stayed fairly united. I think the fact that the cantons have quite a bit of power helps. The federal government has power, but not as much as I would say in the States or in the UK. So unfortunately, they've given up on sound money. Maybe that will come back. We'll have to see. So that's Switzerland. The markets are fairly quiet, I would say, today. The dollar continues to go lower. The dollar index right now is 90.43, down almost 1/3%. And the key level to keep an eye on there is 90.11. And I see that the bond market, the yields have come off a little bit today. We got up to 266 on Friday. We're now on that 263 level. So if you enjoyed this video, please like, share it, subscribe to my YouTube channel if you haven't yet. And you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.